You're welcome. Investor Coaching Show, Paul Winkler. Talking about money, investing, financial planning, retirement planning, investing for that time when money is working for you rather than you working for money. Now, how do we get there? Well, part of the way we get there is make sure that we don't lose discipline at key times. Because investing is simple, but it's not easy. Let's just put it this way. If it were easy, we would see the likes of the huge mutual fund companies getting higher returns in the market, and they're not even coming close. We would see the investors using those investment vehicles getting higher returns, and they're not. Why? So often is because the media is going to be feeding you chock full of things that scare the living daylights out of you on a regular basis because they know it will engage you. In order to get your eyeballs glued to a screen, we got to tell you something really, really scary. And there are people out there, young people, who are despondent about life right now. And they're concerned about having kids because I don't want to bring a child into this world. There are people that are concerned about their futures. What was it, 50%? I think it was, I said something like that. 50% of people were absolutely panic-stricken over global warming. And there were over 50% of American young people were looking into the future with dread, I think was the word that I used, or something very close in the past couple of weeks when I was talking about that research. But it was a study, it was like 10 countries.
Wow.
10 countries. And the anxiety is palpable. Now, how can investing solve this anxiety?
Do tell.
Yeah, this is going to be good, okay? So this will be good. Vladimir Lenin, this is the economist of all things. And I thought it was so brilliant that there's not a whole lot that I want to add. You know, sometimes I'll see stuff in The Economist, I go, sometimes I see things that I'm going, this is brilliant. This is really good. This is a keeper. Vladimir Lenin believed that a tiny vanguard could, through force of will, harness historical forces to transform how global capitalism works. He was right. However, the revolutionaries have not been bearded Bolsheviks, but a few thousand investors, mostly based in Silicon Valley, running less than 2% of the world's institutional assets. So who is transforming? And we're not making a value judgment as to whether the transformation is a positive one or whether it is a negative one. We're just making the point that, yes, we do see a transformation taking place at this very time. Based on what? 2% of the world's institutional assets, this huge transformation that is happening that no one can deny is taking place. Okay, back to the article. In the past 5 decades, the venture capital VC industry has funded enterprising ideas that have gone on to transform global business and world economy. Now, venture capital. Yeah, people that go, hey, look, I see this as a business that has potential. It seems like a really good possibility for something going forward. I want to get in on this. I've been talking jokingly about this 10-engine airplane that somebody has come up with, 10 electric motors on this thing, and it's literally an ultralight, no license to fly it. They are actually up to the point where they're raising money for this thing. They're up to the point where they're telling you now where you can go and try this thing out. And, someplace, I didn't even look at the video, but it's someplace in the country you can go try this thing out and check it out for yourself. But the idea is you're going to be able to own one of these things. They got one that was supposed to go on sale. I don't know if it did or not, but it was for literally the price of an SUV. And it flew like for 30 minutes. It took 2 minutes in a flight simulator to learn how to fly the doggone thing. And then you could fly it to wherever you wanted to go and then fly it back. And you didn't have to have a pilot's license. You didn't have to go through extensive training or anything like that. Pretty cool stuff. So anyway, this is what venture capital does. It funds things that are enterprising ideas. And 7 of the world's 10 largest firms, mind-boggling, 7 out of the 10 largest firms were VC-backed. Venture capital money has financed the companies behind search engines, iPhones, electric cars, mRNA vaccines, a lot of really cool stuff, okay? So this is investment money. Now, is this in something you invest in? I'll get to that. Now, capitalism's dream machine is itself being scaled up and transformed as an unprecedented $450 billion. That's a lot of dough. $450 billion of fresh cash flows into the VC scene. Now, what's going on here? Well, you only have so many public companies to choose from out there. And you have people that are going around and going, you know what, let's see, can we do something else? People are always trying things. Doesn't necessarily mean I'm going to jump on their bandwagon because they try stuff. I like learning from other people's mistakes. It's really fun for me to watch other people make mistakes, because you look at all the, well, more about this in a second. I'm going to get ahead of myself because this is juicing me. This turbocharging of the venture world brings significant risks. I agree completely with that statement in here. From egomaniacal founders torching cash to pension pots being squandered on overvalued startups. Now this is right here the risk. When somebody looks at you and says, Danny, Leviticus, you got great ideas. You are the bomb. You are the best. Oh my goodness, this is the best thing I've ever seen. I've never seen anything so good in my whole life. Wow, you're brilliant. I want to throw money at you. What happens to your ego? It goes up way faster than the investment goes up. Yeah. I mean, it's hard when people are singing your praises all day long for you not to drink the Kool-Aid.
Right.
It's really what it gets down to. And then the pensions, basically what's going on with pensions, they're going, we're underfunded. We got a problem here. We don't know what to do. We have a certain liability that we have to have money for in the future to meet our obligations, and yet we don't have enough money in the pension to meet those obligations. So hence, we need to hit it out of the park, boys and girls. We got to do something big. So they take these kind of crazy risks. Wow. And what we know about that from the research over and over again, the very biggest pension in the entire world gave up on it finally. And I think they're actually slipping back into it again, which is just mind-boggling to me, because they realized that, stock picking and market timing didn't work, but, they stopped doing it and they decided, well, let's do it again. Why? Because we can. And it's not our money necessarily, it's other people's money, and this is fun.
That's what, the largest pension?
Yes.
I can't believe their policy statement allows that.
It does. As a matter of fact, they changed the investment policy. They amended it to say that they're not going to do it anymore. And the last I knew, they actually started slipping back into it again. Go figure. Well, they have to alter their investment policy statement, which is that is like the blueprint.
Right.
Most people don't even know what one is because they don't have them, but we require that our clients have investment policy statements because it literally protects you as an investor. It's literally, what will we do? What's the expected return? What's the asset mix? What is the investment philosophy behind this? What types of, will we engage in stock picking, market timing? No, in our case. Will you use hedge funds? No.
Derivatives.
Derivatives,
short
margin
sales.
Transactions, those types of things. Yeah, and all of those would be no.
Those are no's.
Yeah, those are no's for us. Doesn't mean that you won't have pensions, and they will. They'll do it. There'll be yeses for them. The success is now spilling over. Okay, so they said this success they're talking about here with these venture capital-backed unicorns is spilling over to the broader financial industry. As VC-backed firms list, the resulting windfall is being redeployed into new funds. Meanwhile, so they're getting some money. They're getting a lot of money to do something with. Meanwhile, the interest rates are still low. Pension schemes, sovereign wealth vehicles, and companies have got a feverish dose of VC envy. What is that? Well, it's kind of like in the mid-90s, Jane Bryant Quinn and she said people had portfolio envy. And what that was, you remember that, Dan?
Yes.
Yeah, so Jane Bryant Quinn she was a financial I don't know if she's still doing it or not, but she was a financial columnist. I interviewed her once for the radio show that I had in Des Moines, Iowa. Actually had, when my show was syndicated, I interviewed her. And what happened was, I said, so Jane, she had this book, and we got to talking, and she started talking about people with portfolio envy. And it was, what people do is they talk to their friends. And their friend always has something in their portfolio that just did well. Something that did really good. And what they do is they go, ooh, and people always want to make you think that they're really brilliant. So they're going to tell you about the investment that they've got that did really, really well. And then what happens is you go and say, man, I got to do that. Right?
I heard it this week.
I see.
I heard it from a client this week that just a new person moved, like many new people are moving here, came to work with her. She went out to Opryland, took them to Opryland to see the lights. And he stays at home and trades options all day long.
Yeah, there you go. And then
and he never loses. So I'm going to start trading options. I went, no, you're not.
Yeah, you will
and
only
I said, people always tell you,
Yeah, you'll only hear the success stories.
They never lose.
And what happens is psychologists actually call it something because it's so common. It's overconfidence bias.
Oh, yeah.
So this happens, and this is what's happening here. You've had a few companies, a small handful, a tiny handful of companies that have knocked it out of the park, coming up with search engines, iPhones, electric cars, and mRNA vaccines. And then what happens is people think, well, this is what venture capital is. You get this, you hit it out of the park, you make a ton of money, and you become rich, and you get these rates of return of like 17%. That's what they had in here. VC funds, capital returns on some of these things, which is 17%. And what people do is go, wow, this is a sure thing. Well, no. If it were a sure thing, then they would not want to pay you a dime over what Treasury bills pay. If they knew that they were going to hit it out of the park, they would go, what's the cheapest I could use this person's money for? And because everybody knew they were going to hit it out of the park, they would actually not have to pay more than that cheap rate of return. That's the way life really works, okay? So what's happening is people are getting this feverish dose of VC envy, and they're scrambling to allocate more cash to dedicated funds or setting up their own VC arms. Now, what does that do when all of a sudden somebody sees something that did do well, and all of a sudden more cash starts to chase it? You have lots of supply of cash with less demand for the cash, and then since there's less demand, the rate of return on the cash goes down as a result. And even if you did have a good thing, it goes away for that reason. Okay? Yeah. So what's happening here is you're going to end up with just a wash in cash. And you have all this cash and you're going, what do we do with it? And as I go back to the egomaniacal venture capitalists, they waste it on stuff that may not be worth anything. Okay, now I said this is going to be optimistic, right? It is. I'm getting there. Okay. As money pours in, VC is permeating the economy more deeply and broadly. What once was an American affair is now a global one, and 51% of deals by value in 2021 happening outside of America. China's VC scene has tapered off recently because of consumer-rich crackdown by their country's president. However, the industry is booming in the rest of Asia, and a few decades of slumber innovation in Europe is awakening, with 65 cities hosting unicorns. 65 cities in Europe hosting unicorns. Okay, these are companies that are getting their new out there with innovative, interesting ideas. VC boom has so far focused on a narrow cohort of consumer tech firms such as Airbnb and Deliveroo. Now more cash, and this is where it gets interesting. Now more cash may finance areas where disruption is less advanced. This year, investments in clean energy, space, and biotech were double those of 2019. So the things, now I don't want you to sit there and go, but Paul, I believe in, or I don't believe in, climate change, global warming, anything of that, this has nothing to do with it. This is what younger people are worried about, right? Is it not what people are worried about? Climate change, whatever. They think they have a solution, but the solutions that they have right now aren't working because they're too doggone expensive. Now, here is the rub. The stuff that they're coming out with to solve the problem is not going to solve the problem because it's not economical. But when you have this much money searching for a solution, I'm telling you, the solution arrives. It wasn't until we had a real problem on our hands that everybody absolutely knew we had a real problem on our hands, and a lot of money started flowing toward the problem that we figured out how to drill down horizontally or drill down vertically and then go horizontally. I had nothing to do with it. Humans did not figure out how to reach those pockets of oil that were sitting underneath the surface that they used to leave behind because it was too hard to get to, until there became an economic need that was so dire that we had to figure out a solution. And that's basically what we're seeing right here. Industry is becoming more open, whereas once a cozy elite of funds had unusual power, now mainstream financial firms are involved, and there are vehicles that allow ordinary investors to gain exposure cheaply. So you're going to see this in your portfolios. You're going to see the investment firms. They're going to be trying to get you to invest in this stuff. I'm telling you, the conclusion that the economist draws with regards to this, I agree with. Because they said, obviously, there are dangers. One is that money corrupts. Soaring valuations and abundant capital can make firms, their backers, self-indulgent. The danger is that, as in any asset class, returns are diluted as money pours in. There it is right there. Mainstream funds may find that, as well as having to cope with VC's notorious booms and busts, long-term returns are lower than they hoped. Probably going to be the case. But my point to you is this: it is not necessarily the investor in these ventures that will be the benefactor of the solutions that are founded by these efforts. It will be every other firm that you happen to own in your stock portfolio that will benefit greatly. And, this is why I look at, especially when people become despondent, I actually become more optimistic. Because when they become despondent, then I know, oh boy, now there's the impetus to find a solution to the problems that we face. And now people are going to put forth the effort, and they're going to put forth the money, because everybody wants to move forward. Paul Winkler, Investor Coaching Show, Super Talk, 99.7, WG.
Dude, you being a super geeky guy.